B plus quarter, maybe an A minus. The service number was terrific. The guidance was terrific. It looks like the lights in China are back on for the iPhone. And yeah, the services is the narrative now. If you look at where we might be on services, not at fiscal year end, but calendar year end this year, that number is going to be close to maybe 50 billion in revenue. Squint a little bit. And at the end of calendar year 2020, we're going to be closer to about 60 billion. Yeah, services is the narrative. iPhone's going to generate a lot of cash. If key markets aren't, if they've stabilized, if not collapsing, that's a positive there. Again, B plus, maybe A minus.
Laura, what's driving the services growth and specifically the margins, which I think are double margins of other Apple products?
Yeah, so, I think the most important numbers for the quarter were the 950 million unique users, and then the lifetime value per user is rising. So we love the fact that the iPad revenue is up 22% and wearables was up 50%, because these add-on products that they're adding, like the speakers and the wearables and the pods for your ears, all they do is increase the lifetime value per user, what we call subscriber, because the churn rate once you get into the ecosystem of Apple is 10 years. So we like numbers that bring more on-ramps into the ecosystem to that 950 million unique users, and then we really like things that keep them there and get more money per user. That's how we look at revenue growth. So we love the 390 million paid subscribers, up 30 million 90 days, because that's telling you there's stickiness and there's a growing lifetime value per user in the ecosystem.
So, Laura, given what you just said, what is our tolerance for numbers like iPhone's down 17? Can we do that quarter after quarter after quarter? What is the red line now?
Because I think what's going on is Wall Street loves diversification. We do not like single product companies. So the fact that iPhones did about 30 million of revenue and services did 11.5 billion of revenue means and one's growing and one's shrinking. It means pretty soon, 3 years from now, we're going to have a 50-50 mix. Wall Street likes that kind of mix much better. We'd much rather have dependence on 3 revenue streams, 4, 5. We don't like single revenue stream companies. So the fact that iPhone is giving up its mix towards services or towards iPads or Macs or wearables, we like that diversification of revenue dependence.
David, how key was the China improvement? Tim Cook telling Josh Lipton about the change in tone around the trade negotiations and the overall better environment.
Yeah, that was big news. You think about the last data point on China was an absolute collapse, and so it's coming back. Maybe it's not roaring back, but certainly I think maybe the bears were girding for, not maybe bears, but investors were maybe girding themselves that China was still maybe just slowly on the mend. So again, incrementally, that's a positive data point without question.
Hey, Dave, what about the buyback? Give me your sense there. 75 billion, obviously. They continue to buy back enormous amounts of stock. Best use for their capital, or at least part of it?
Right now, at the prices that they've been buying back, David, at those valuations, it's huge. I may not have these numbers right, but you just go back 4 years ago to the second quarter of 2015. The revenue number was about 58 billion, about the same. 2 billion more on net income, and the earnings per share that we just posted was a little bit better. And the reason being is that they shrunk the share count by 25%. And so I think most CEOs, most C-suites don't buy back stock smartly. You got to buy it back. You got to swing a fat bat. When it's really cheap, that's when it's the most accretive. Right now, it's very accretive, and I hope that is their primary motivation to spend that cash. If the stock would ever get a Jim Cramer type like 20 PE, then maybe start looking at some other areas. But right now, I like the fat bat that Tim and Luca are swinging.
Hey, Laura, what's the urgency on a 5G phone? Can we wait a year and a half for that?
Yeah, I think it's going to be 3 years, and they refuse to talk about it. So I like the more that iPhones fall by 17% a quarter and services grow by 16% a quarter, the less dependent this company becomes on a single product, which I think is good for the valuation multiple long term. The point I wanted to add to what David was just saying and building on that is we have $113 billion of cash on the books. They're going to do $50 billion of free cash flow, and they said they want to have zero net cash over the next 3 years, which means we're going to have a floor under this stock of share repurchases, which means your upside downside risk reward is positive on Apple because they're constantly going to be in there buying shares out of the market, which I like a lot for this stuff.
Yeah, well, we've just watched the market cap exceed $1 trillion again. Of course, it has been higher than that. I remember 1.1 trillion prior to, obviously, that swoon it took towards the end of last year. David, you know, we talk about this a lot. It never actually happens, but again, it's sort of part of the mosaic. The idea that they might also do a larger deal, larger than their largest deal, which, of course, I think was just Beats at a few $1 billion, 3 or so. Do you think it's something that they might consider and or something that they should consider, particularly as it deals with their growing interest in providing content, for example?
Yeah, I think they should. Again, let's talk about what currency they might have at their disposal, David. Again, if we get PE nirvana and we get Apple someday at a 25 times multiple, that's a very expensive currency. Now you consider maybe looking at a company like Disney instead of. But that's a big if. That's a big if on the multiple. The only way that you would maybe go for something like that is if you found that buying back a lot of stock was problematic, or you just wanted to make a big splash and really diversify away from the hardware side of the business. But I think you got to give Apple credit. I think they've been very disciplined not to do something of that size, because I can't remember a year over the last 4 or 5 that a lot of folks have been begging for just something like that.